As per an Economic Times report, the National Stock Exchange is willing to pay rupees 1,388 crore to the Securities and Exchange Board of India. The amount is being paid to settle its long pending co-location and dark fibre case. So, if NSE receives approval from the markets regulator, it will be able to go ahead with its much awaited IPO proceedings, which has otherwise faced intense regulatory as well as legal hurdles. But why does NSE want to go public? Are there any significant benefits attached to it? Well, as far as the market beliefs are concerned, a company will be held more accountable towards its shareholders if it goes public. Moreover, the entity will come under stricter regulatory framework. However, if we have a look at the other side of the coin, does listing always help? Can't there be lapses in a listed company? Well, in order to understand the nitty-gritty of the overall issue, let us first try to decode the regulatory hurdles that are keeping the NSE from taking the next step. The story dates back to 2009 when NSE introduced co-location facilities within its premises. Under this arrangement, stockbrokers were allowed to establish their IT servers near NSE's co-location data centers in exchange for a fee. This fee directly went to the NSE. The main advantage under this setup was that brokers enjoyed faster access to the stock prices information. This directly led to the faster execution of trades, which was relatively quicker than the trades that were otherwise carried outside this facility. However, 2015 came as a shocker for the Indian stock market after a whistleblower filed a complaint with the Securities and Exchange Board of India. As per the complaint, it was alleged that few brokers got special, or you can say early, access to the market data that undermined fair play regulations. At that time, NSE was using TBT, that is tick by tick feed, that sent every minute details about the stock price movements to the brokers who were working under this facility. However, the problem arose when it was reported that the TBT infrastructure had certain loopholes. Shockingly, some brokers were able to connect their system slightly earlier than others, due to which they received data ahead of others. Though the difference was just a split second, it was already enough for brokers to make huge amount of profit. This means that NSE did not disseminate the real-time data equally to all the brokers. Later on, former MD and CEO of NSE, Chitra Ramakrishna, was arrested by SEBI. She was accused of misusing her position to benefit certain market participants. The CBI also arrested NSE's former group operating officer Anand Subramanian for undermining his position. Now, you may be wondering why were co-location facilities were introduced in the first place if it gave unfair advantage to some brokers. Well, this intended move was not illegal in nature by any means. In fact, by 2009, major global exchanges like NYSE, LSE, Eurex introduced co-location facility. However, what raised eyebrows among the experts is its implementation. Usually, SEBI puts out a discussion paper before taking such crucial steps. However, in this case, it did not take any feedback from the market participants before even allowing NSE to offer co-location services to its broker members. Moreover, co-location facilities became a steady revenue stream for the NSE as brokers paid a fee to access them. So, despite facing several challenges, why is NSE going for an IPO? Well, there are mainly 4 reasons for it. Number 1, exit by early investors. The largest shareholders of NSE want to exit their stake in the company. Notably, LIC owns about 10.72% stake in NSE, while SBI holds about 7.76%. In fact, unlisted shares of NSE have soared over 105% in the last 1 year, while its market cap is valued at rupees 5.9 lakh crore. This gives NSE a good reason to list on the bourses. Number 2, corporate governance. The NSE has come under intense scrutiny amid co-location and dark fibre cases. Once the company gets listed, it will be forced to tighten its norms and it will also be held accountable to the public. Number 3. Boost in international credibility. If NSE is listed just like any other global stock exchanges like NYSE, LSE, HKEX, it will be held accountable for its actions on a global scale. In fact, FIIs will be able to invest in NSE shares once the exchange gets listed. Lastly, the funds received through this IPO will be utilized to develop technical infrastructure. Now, let's try to have a look at the other side of the coin. Think for a second that if a stock exchange like NSE gets listed, will it be ethical from the investor's point of view? I am saying this because listed entities have the added pressure to generate profits too. So, does listing mean lack of credibility? Well, the main concern is that if NSE, or for that matter, any company that gets listed, it will have the added pressure from investors to deliver strong results. This may divert its attention from its long-term stability. In fact, if things go unchecked, the leaders who are running such listed companies may only focus on boosting the share prices rather than concentrating on maintaining the market integrity. In fact, the Bimal Jalan committee formed by SEBI recommended that stock exchanges should not be allowed to list. For instance, in 2012, the Securities Exchange Commission slapped a fine of $5 million to the New York Stock Exchange for giving early access to proprietary customers. Again, in 2014, NYSE paid $4.5 million to SEC for violating trading rules. Mind you, these incidents took place when NYSE was already listed. So, going through these scenarios, does listing stock exchanges grant foolproof protection against regulatory lapses? In a nutshell, does listing a company always help? Well, in this regard, even if NSE goes public, it will still be regulated by SEBI. SEBI has stated in a discussion paper that an exchange's regulatory and commercial functions will be seen by an independent arm or overseen by the market regulator itself. Moreover, it has stated that stock exchanges cannot be listed on their own platform as it raises concerns related to a conflict of interest. So, in a nutshell, it all boils down to two things: trust and integrity. If NSE can maintain a healthy balance between profit generation and market fairness, there will be no question of credibility. In fact, everything will be going in a smooth manner. For more such insightful takes on business and economy, subscribe to Bizz.